All right, guys, holiday weekend isn't quite here just yet. We got some work to do here tonight. Great to be back here with you all once again. It's Wednesday evening. It's April the 8th, 2020. My name is Joseph, as always, and welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow's trading session. And as you can see, I got all the charts all prepped up in the background. We get some oil, we get some S&P, and of course that yellow metal, the gold futures. We'll grab all the charts and put together the charts, the levels, the setups. We'll cover everything here for tomorrow's trading session. I've also got the calendar ready for us tomorrow. Got a weird holiday shortened week. We're all excited about Passover and Easter coming up here. Just a few days here, but of course we got some big news scheduled for tomorrow. We got some closings. We got a lot of stuff I want to talk about for tomorrow and Friday, and that way I want to make sure you guys know when to be trading, when to be sitting on hands, and what to be aware of over the next 24 hours. So charts are ready to rock. The calendar is ready to rock. I think you and I are both ready to go here as well. Before we jump into the video tonight, though, make sure you subscribe to this YouTube channel. If you do one thing here today, make sure you hit that subscribe now button. Subscribe to the YouTube channel. That way you never miss another great video here on our channel. And how about questions tonight? If you have any questions, anything at all, I'll circle back and answer the questions in the comment section below. So type those questions in the comment section if you have any questions. And do you tune in every evening? Do you tune in every evening to watch this video? If you do, hit that thumbs up button for me, will ya? I really appreciate you guys logging in and checking me out every evening on this channel. Thank you so much for supporting this channel. Hit that thumbs up button for me. Enough of the introduction here, JJ. Let's jump into this video tonight. I want to grab the economic news calendar and kick off this session because we got a lot to talk about here as we go into the end of this week. Tomorrow, of course, is Thursday. It's April the 9th. And before we jump into the news tomorrow, I want to remind you here of kind of what we're walking into here tomorrow and Friday. Now, obviously, most of us probably are aware, it's Easter weekend, it's Passover weekend. Today was the first day of Passover, right? Happy Passover, everyone out there. And of course, you got Easter weekend coming up on Sunday. Now, what that means is Friday is Good Friday, right? So it's Good Friday, the Friday before Easter. Markets are closed up on Friday. So we got no markets open in North America on Friday, right? I think markets might be open in Europe, but usually when markets are closed in the US, in Canada, right, usually that means everybody will observe it. So we know we have markets closed on Friday. We also have markets closing tomorrow at 2 o'clock Eastern time. Now, as we've been talking about all week, what that really means for me here is we have a very small window ready tomorrow, Thursday, on the 9th. Now, the window is very small, and that means there's going to be a sense of scarcity tomorrow. Remember, if you're working for a big trading firm, you can't do business tomorrow afternoon or on Friday. So anything that has to be done, I know that us lonely day traders, right, trading from our home offices, we don't have to worry about this. But if you're managing, hundreds of millions, billions of dollars of other people's money, major trading firms, they really struggle with this situation because when money has to move, when things have to move, and the markets are closed, it just kind of mucks up the entire thing. It creates this very, sense of scarcity, and that leads to a lot of jittery price action and a lot of head fakes, a lot of unpredictable stuff coming out tomorrow. On top of that, right, that sense of scarcity, on top of that, you've got some really big news coming out tomorrow. We've been talking about how the OPEC announcement is supposed to be sometime around 10 o'clock Eastern time tomorrow. We, of course, just heard this morning, I believe they announced it. The ECB is also going to be making some sort of statement. They have a group ECB meeting trying to get everyone on. That's something new. We haven't heard that all week. And then, of course, my boy, right, Jerome Powell from the Fed. We've known about him all week. But, look at this, right? This is insane. We've got really kind of the three biggest pieces of our world, maybe not the world, but of our financial world, are all coming together tomorrow, right? We get the big heads of OPEC, we got the U.S., right? We got the Russians, and we got the Saudis, right? We've heard about that drama all week. We'll talk more about that in a moment. We got the ECB, Again, that was a headline we saw this morning. Apparently tomorrow, they're like, everyone else is meeting. Why don't we get together, right? Social distancing, of course. They better have masks on. I will tell you that. They better have masks on at that meeting when it's published tomorrow. They're making us wear those darn things everywhere we go right now. They better have some darn masks. If I see everyone hugging over there, I'm going to be pretty upset. Anyways, all kidding aside here, the Fed, of course, right? Not the Fed, but of course, Jerome Powell tomorrow at 10 o'clock. So, all kidding aside, and I don't mean to joke about that stuff. I think like everybody else right now, I'm a bit desensitized to the whole thing. You know what I mean? It's like we've been hit by this for so long, for 4 weeks now. I do apologize to make light of the situation. I do want you to keep social distancing. Please wear the masks wherever they advise it to. So, we have three of the world's biggest financial entities, cartels, right, cults, whatever you want to call them, and they're trying to all come into this little area over here. Holy Christmas, holy Passover, holy Easter. This has a very the term powder keg, right, comes to mind here. So we have a very small window of opportunity, and we're going to try to cram as much into this tomorrow. Now, you know, I'm tempted not even to try to put the charts together tonight because we have so much coming out. There's so much up in the air right now. We've recently just heard from the U.S. about royalties to oil-producing oil firms and that spike things. So just please be aware, I'm going to do my best I can tonight to get us prepped up and get us ready for the really what is unlimited amount of different scenarios that we may see here for tomorrow. So that's the big news here for tomorrow. And of course, you know, they get some jobless claims, right? Some PPI number tomorrow. I just don't think that's going to be on our radar here tomorrow. Jobless claims over the past 3 weeks have definitely been pretty busy because, you know, everyone's filing for unemployment claims. We normally don't really pay attention to jobless claims, but we may see a shot tomorrow, right, with some jobless claims and PPI number tomorrow, 8:30 Eastern time. I'll tell you, if you've got everything coming together at 10 o'clock tomorrow, and we have that afternoon off, you know, it's closed in the afternoon. You really have no other choice, right? We're going to have to get in there as early as we can tomorrow, early in, early out. It's going to be difficult. It's going to be really difficult because we're going to probably see some decent price. You know, that's the hard part. People could easily be just completely obsessed with OPEC, ECB, and the Fed all at 10 o'clock tomorrow. We may be hearing crickets chirping tomorrow during that 8:30 news. We may also get some really good price action because there's no other time to do it. So there really is. It's very much a variable here right now. So tomorrow morning, you know, my strategy for tomorrow is I'm definitely not hitting that snooze button. I'm getting up extra early tomorrow. I'll be at my desk early. I know that 10 o'clock hour is going to be most likely all messy and sluggish and choppy. So I'm going to try to get to it early, and then we'll see if after that, you know, maybe 10:30, 10:45, 11 o'clock, maybe we can slip something in there towards the end of the morning. So get at it early, stick around into lunch, but just be careful. Be careful tomorrow. The big thing tomorrow is risk aversion. Stay away from, we're cutting our positions down. We're widening out our stops and targets. We're being very conservative as we go into this area because at any moment, this thing could get blown out of proportion and we may see some very big spikes in both directions. Now, I know I'm usually a lot more clear and concise on this, but with the situation we're dealing with right now, I think we're doing a pretty good job with it right now. Tomorrow morning, and every morning for that matter, Monday through Friday. Friday, of course, is a holiday here this week. We'll be in our trade room tomorrow at 8 o'clock Eastern time. I would love to have you there with me, and we'll take the good, the bad, the ugly, and we'll do what we do every day. We'll go in with a positive mindset. We'll get the charts all prepped up, and we'll do our job like we always do. We'll get there early. We'll trade around that 10 o'clock block, see if we can find something towards the end of the morning, and then we'll go hunting for Easter eggs for Easter weekend, right? Or we'll celebrate with family for Passover. So we know we got a holiday weekend coming up, and of course a very happy holiday to everybody out there who celebrates. Now, speaking of celebration, let's get a little charting celebration going on here tonight. We get some crude, we get some S&P, and of course we got that gold here on the radar tonight. I'm going to jump into the E-mini here first because I think that's going to be the one on everyone's radar here for tomorrow. We'll grab the gold and the crude oil here as we go. And I think the most important thing to really understand about this E-mini right now is we're kind of in a tale of two ranges in all reality. I mean, you really could say we're a tale of three ranges, really. There's a range up top, there's a range down in the middle, and there's a range all the way down at the bottom. And you can kind of see how the market, right? A little range up there, a little range up there, big old range down there. When I look at this chart right now, the first thing I think is, okay, this is a big range that's kind of broken up into two smaller ranges, one up top and one down bottom. If we hold up here, we can trade up there, but don't be surprised if it moves real quickly down to that range below us, right? So this area right in the middle might be a little bit of a hot potato, right? Might be a little bit difficult to kind of, we're probably going to slip through that area pretty fast because you'll notice everything's kind of slipped through those areas. So I've got really the tail of, again, I'm calling the tail of two ranges right now, but really it's kind of the tail of three ranges. One up top, one down bottom, and it goes all the way down at that 2480. If the buyers can push it, there really isn't a lot above us right now. There really isn't. I mean, when you look at the bigger picture chart, remember we had a couple days there where the sky was falling. So, I mean, you really can go all the way to 3,000 before you start to see another major level of resistance. Now, 3,000, I'm not going to go as far as to say that's where the buyers are going tomorrow, but just so you know, there's not a lot of numbers up here we can really sink our teeth into right now. The bears obviously want to get back down to that range. And if they can hold it, they want to get down to that 2,500 big round number. So let's be aware of those three big ranges and really unlimited, not unlimited obviously, but very, very wide open spaces here above us. Now, let's zoom in a bit closer on this now because this is screaming false top. False top. We have a false bottom on gold tonight too, and we'll talk about this. So I use a term called false top. And it's whenever you have a major high, but you can easily see there are other tops right here that are going to be kind of hidden. It's almost like a drop ceiling, kind of a metaphor, right? It's almost like a drop ceiling, right? You get the top of the ceiling, right? And they get this little drop ceiling right here they put down overhead. The reason why I mention this is because we know we're bullish right now on the S&P. That's not, I think everybody knows that, right? We're bullish here. I want to be a buyer. But we see this quite a bit where the market will do this, right? It'll, something like that, right? And you'll have this major top over here. You'll get this big, strong run up. You know me, I like to find those hidden channels, right? And so I find my channel. I'm looking to buy off that channel, and I think I have enough space to do this, right? I think I have enough space up here. But in all reality, it's a false ceiling. There's this little top right there, and that's the actual top. And what happens is a lot of these times you've really got to be careful as you're buying into. We never want to buy into the high, but it'll be a false top. It'll be a false sense of open space here overhead. So this is what I think is the biggest variable here for tomorrow on the S&P. That top is the real top. And you'll see we're sitting right at that top right now. That means now, if I can, let me zoom in a bit closer on this. What that means now is that if I get this pull back now, I've really got to be careful, right? I've really got to be careful. In fact, you can actually bring this probably down further just to kind of illustrate that the whole situation here. So my biggest concern now is I know I'm a buyer, right? We have a very strong move higher here. I do want to be a buyer. I want to buy at a support level. It's a trending environment, so I always like to use my channels. I'm marking up this low or the high. I'm marking up that low. I'd love to buy off the low of that channel. I've got a little trap low I can use here. The problem is though, you're asking for trouble there. You're asking for trouble. You know what I mean? It may push through it, but for all I know, right, we'll go up and we'll collapse back down again. That false top that we see here, I think is very much misleading. So I've really got a challenge here. I either need to get a shallow pullback and look for some type of pattern that would allow me to avoid buying high, which if you watch my newsletter, you probably know what I'm going to say. Look for a trap off of the low, or we may end up getting a much deeper pullback, which would really be ideal. I've got some levels of support marked up down here, right? That deeper pullback now, remember what we look for, whenever we see a real deep pullback, we look for those nesteds, right? Those nested. So just off the top of my head here right now, I think the false top is a really big concern here for us. And I'd like to trade around that with traps, and then, or if we get lucky with that nice deep pullback. So, again, we know we're bullish. I want to buy at support, but I think this false top here, kind of this, artificial top, I think is really going to be our biggest challenge here. Now, that also, as you might imagine, that leaves the door wide open for sellers now, right? Because the sellers in the market, they're not fools. They know that false top is there, so sellers can start looking for crown reversals to start picking tops on this, going back down into that trading range, or we may end up seeing those full reversals as we get back down to range number 2. So now you know kind of what my vision is on this at this point. So as I mentioned earlier, I'd like to see some sort of trap down here. One of my favorite, well, not one of my favorites, my go-to pattern whenever I have a concern about buying into resistance is I always like to look for those traps. And so what I'll do is I'll wait for the pullback. As the market pulls back now to the moving average, I would normally look for a seller failure and just try to buy into those stop losses. But again, I worry though, and you know what? And this is one of those things where you gotta just prepare for the worst. Hopefully it goes back. Hopefully it's nice and easy, but it doesn't look like that right now. It doesn't look like that's the situation we're in right now. What I'd rather do now is, instead of looking for your straight up failure pattern, what I'll do is I'll look for that try trap. And this is going to be really, this is going to be necessary really in my eyes, because that's going to allow us now, as we pull back, what's going to happen is, right, as we pull back, sellers will think the market's reversed. They're going to start selling off the moving average. And they might be successful because, again, that false top will give those bears a lot more confidence. What I want to do is I got to find a trap. And the only way to find that trap for me going to be 1 try, 2 try, and trap low from there. Now, on that note, I've really got to be careful here. Location on this is going to be critical. I'm going to want to make sure I'm not buying too high on this. This is going to be where being with me tomorrow in the trade room will really be helpful to make sure we get our equal 1-to-1 target, so we get some good risk-reward ratio on that. Then, of course, the next target will be up to retest the high. So I know I'm going a little bit deeper down the rabbit hole right now, but if you tune in every evening, if you watch this video, every evening with me, or almost every evening, we've talked about this pattern many times before. It's called a 2-try trap pattern. It's like a nested failure with a little trap low to avoid buying into those stop losses or buying into that high. Now, if I can get a much deeper pullback here, that would always be even better. That will be even better, because then we're not worried about that false top. Now, deep pullbacks oftentimes are going to have either 2 legs, and if you get 2 legs, we'll draw that trend line over. We'll try to use that trend line to buy it back up, right, as a level of support. Now that false top, it doesn't matter, right? Now we've got plenty of risk-reward ratio on that trade, and we call those 2 LPs, or 2-legged pullbacks for short, right? Now, we may not get that 2-legged pullback. We may just pull back off these highs. If I can pull back, I'd love to use that trend line down there. I'd love to see us get away from that false top. But with that big move down, though, comes a lot more momentum, doesn't it? And whenever we get a lot more momentum, we're not going to be able to use that standard seller failure, right, as we go higher. They look just like this little guy. Right? That just like that little guy, right? They go below the moving average. The bears try to sell it. That's the pattern I look for on a shallow pullback. But this is not going to be a shallow pullback. This will be a real deep, deep pullback here. And when that happens, I'm now looking for those nested failures. Now, we don't need a trap on this, but it wouldn't hurt. All we really need in this situation is just to make sure we respect the sellers, absorb their momentum, let them try a couple times, and we can buy into those stop losses. So a shallow pullback requires a trap, right, to be able to get in. A deeper pullback requires that nested to be able to get in. And keep in mind, too, a lot of times when you get those really deep, deep pullbacks like that, those nesteds, they'll end up 1, they'll end up 2, and because all the sellers are roped into this, right, because they've got that noose wrapped right around their neck, now what happens is when the market, when their stops get run, the market oftentimes races higher. You got to remember, though, that false top is up there. So what's the best pattern to continue this? A trap pattern. Traps are the best setups to avoid buying into resistance or selling into support. So keep your eyes open on, right, those trap setups, those failures, those nesteds, those 2-try traps. And keep in mind, guys and gals, we're going to do all this together tomorrow. I'm just simply putting some ideas on the screen right now and getting all my if-then statements all ready. If you can't be with me tomorrow in the trade room, the next best thing is to grab the free trading course, which will teach you all about my 4 favorite entry patterns, traps you'll learn about, failures you'll learn about. So make sure you grab that free course. I'll put a big button up there in the upper right hand corner. And again, don't forget, I'll put all the membership information you need, how to get registered for tomorrow morning's trade session as a client of our trade room, and I'll put all the information to contact the office down in the description of this YouTube video. Now, we've talked about the buyers here. How about the sellers? What's the plan here for the sellers? Now, I mentioned earlier, the only real way you can get short off this much momentum is with a reversal pattern. And my favorite reversal pattern is called a crown reversal. So for all you aggressive sellers out there, right, if you're trying to sell off of this false top, what I look for basically is I look for the buyers to make the mistake that I'm talking about right now, right? I wait for these buyers to try to buy into that, again, this false top here, and we look to trap high. You know, what's the best pattern to avoid selling too low, to avoid selling into support? Trap patterns. So as a reversal, I'm looking for a crown reversal. This would probably come later in the session, right, after these buyers have tried twice off the low. Or another reversal pattern, which is a lot more reliable, would be a 1, strong move down, 2, a pullback to the moving average, and 3, a strong move off the moving average. What do we call this one? We call this a 1, 2, 3 reversal. 1, 2, 3 reversal. Now this really sets up for a great trade because now we can mark up that low. I can use that trend line to find the high, that hidden channel high, and now I can sell off of that high. I call that a 1, 2, 3 reversal into a hidden channel pullback. Now sometimes what happens is these things just dump, right? Sometimes what happens is they'll pull back, the moving average comes over, and the market will just collapse, right? It kind of has this feeling like there's no buyers at all, right? Every time there's a green candle, it gets sold off again. You know what I mean? Those types of market environments. If it really starts to collapse here, and there's a lot of reasons why this could happen, right? We got the coronavirus and this curve that we're starting to flatten out right now. It looks like they're starting to flatten out at least. The last couple days appear to be maybe a blow off top in some of these hot spots around the world, but we know better than to think it's over, right? We know that most of the coronavirus cases, they do that kind of head and shoulders, right? They go up, they pull back, they go up, they pull back. You know, we may still have the worst coming the next 72 hours here. So, who knows? You know what I mean? Tomorrow morning we might wake up and the CDC here in the U.S. may say, shoot, we have a big problem. There's a new hot spot coming, right? And the market may collapse. This whole move higher could easily collapse if we get an update from, again, about this coronavirus. I hope we don't, but that is a real known unknown right now. We've also got the Fed tomorrow at 10 o'clock. If people don't like what they say say tomorrow at 10 o'clock, this could drop out of the sky and start moving. So there's a lot of reasons why it could easily collapse off of this high. And if you start seeing it really get aggressive as it goes, I always like to start looking for those two trap patterns, right? Those two traps. So as it goes down, what happens is it'll pull back, but it won't pull back to the moving average. That shallow pullback is the giveaway. That lower low tells me trap high, and we're selling back down into that trading range. So we'll keep an eye on that kind of collapse as we go. Now, that same idea applies as we go higher here. You know, right now, I can't trust being a buyer here, but if I can get a 1, 2, 3 jump higher here in the next few hours, mark up the high, mark up the low, I can buy the low of that new channel. If we get this market to really spike, shallow pullback, higher high, two trap. You know, again, the giveaway on this is usually that first pullback is shallow, that higher high, and then I always try to line up some sort of hidden channel there, some sort of support line there, so I can buy off of that low. So I'm not afraid of buying high, but we got to get some proof. We got to get some momentum as we go higher. All right, guys? Boy, I know a lot to cover on this chart. You know, like I said earlier, there's a lot of variables out there right now. This false top is something I'm very curious how this is going to work out for tomorrow. And you know what? I almost forgot to. If we go sideways up here, I almost forgot, right? If we go sideways, there's a decent chance that as everyone waits to hear about the virus, they wait to hear about the Fed, they wait, we're waiting for everything, right? There's a good chance we might go sideways. If we do go sideways here and we start seeing this thing flatten out going sideways now that confirms the false top, and now we go looking for buys underneath this. What's the best way to trade a range? When I say range, you think what? Failures and breakouts. When I say range, I think failures. I wait for the price to pull back. I get that moving average. Let's go back here. I wait for the price to pull back. I wait for that moving average now to follow. I wait for those sellers to try to pick that top. The market's not bearish at this point. It could be bearish, but at this point, it's only a small pullback. We're underneath the range. We're inside the support area. We know exactly where those sellers have their stops now. This is why I never try to predict the bottom. I wait for the pullback. I don't try to predict that bottom, because for all I know, they'll run me right out and then go right back up again. What I'd rather do is I'd rather wait for those bears to sell. Then I know exactly where their stops are, and now I can buy into their stops very easily. You know, yeah, you'll miss some trades every once in a while, but the reliability is so much better than trying to pick that bottom on that pullback. You know what I mean? All right, so now we get a good idea of what the plan looks like if it goes up, if it goes down, if it goes sideways, and how to cover that false top, like I said. Now, I mentioned earlier we get a false bottom on the gold, so why don't we talk about the gold? I'm going to save that crazy oil market here for the end here tonight, because they really mucked that whole thing up here this afternoon with that spike higher. So I'll save the crummiest for. I'm kidding with you. We'll save the oil here for the last. How about some gold here tonight? Now, gold is kind of par for the course here. We talked about this last night. We know right now on gold. Let me zoom out a little bit further here so we can see kind of the big picture, because that's going to give you a lot of kind of clues as far as what's really going on here right now. So we look at the gold, and on gold right now, we got that big move up. This, of course, is end of the month of March. This is just before the coronavirus, right, started to kick all of our behinds. And, we got that move down. They ran right back up on the fear, right, of the economy shutting down, the world coming to an end, and things like that, which we now know is probably not going to happen. Now, what we're looking at right now is that blow-off top, right? That blow off top. And in all reality, you could call this another one of those false tops, right? Where you go in, you don't want to buy that pullback, that false top underneath there. But the reality is, though, we know we have that range. And anytime I say range, what do you think about? Failures. We go up, big push up, buyers try once, buyers try twice, and now we're headed back down into that range. The middle of that triangle is the magnet. It's the most important thing we should know right now. Okay, what we have to be aware of is that magnet at 1650. This is where we assume a lot of sellers are going to take their profit. And that means they become buyers. So what that means for me is as we try to go lower here on gold, which we assume is going to happen at some point, we don't want to be selling into that 1650 area. At the same time, if this thing really clears through this area, there is a huge magnet down to that 1600, 1580. We talked about last night how there's a bit of a pendulum swing here that could easily take us. The amount of the move above the range, amount of the move below the range. We've got that whole 1580 area, which is looking like a juicy target. The challenge, though, is we don't want to be selling into that magnet. That's going to be the challenging part here. That's where we're going to be getting out of our trades. So we've got to find a way. We know we're bearish. There's no doubt about that, right? We know we're bearish here. I think that's pretty obvious. The short-term trend here, really the long-term trend too, is pretty bearish in this, right? We got the short-term going down into the range here. Now, in a bear market, what do? We sell at resistance. So I'm trying to find levels of resistance that I can use to structure, right, me getting short. And we also see here a range. Now, my technique is a very simple technique when it comes to ranges. I pay a lot of attention to the size of that range, and then I multiply it, right, overhead. So I take the multiples, that gives me now some resistance here overhead, and I also take those multiples and I bring it down, right, and those become support zones below. Now, whenever I have a range, I also like to use triangles. Triangles on gold, I'm not sure what it is about gold, but gold loves to use these expanding triangles. Not narrowing triangles, but kind of opposite, right? Expanding triangles. So that's a great level around that 1700. I've also got this area down here around that 1665, 1670 area there as well. So when I say range, you think what? Failures and breakouts. We talk about two breakout patterns on the S&P, the 2-try breakout and the 1-2-3 reversal. And then, of course, we've got the failure patterns. Let's talk about this. Now, as we try to go higher, I want to be a seller as we go as we go higher here. I want to be a seller over or on top of, I should say, this trading range. As we go lower, okay, the bears have momentum. So even though I do want to buy low, I've got to be very careful because we're going against the momentum. The hard part, as I mentioned, is if the market runs lower, we've really got to be careful down here because you got that magnet. And what happens a lot of times is you'll see the market make a run, and then it will struggle and struggle and struggle and struggle, and it will snap right back up into that trading range. So we'll talk about some ideas here. If we do get that strong run, how I can get short on this without selling into that magnet. Okay, so bears have control. What are some options here for me to be a seller? Again, we've got that magnet below us, right? I want to sell at resistance here overhead. So I've got my levels of resistance. What I'm really looking at is how far do we get the pullback? If I see a relatively shallow pullback inside of this, right, inside of that first range, if you will, then I can look for pretty much your typical buyer failure into seller pullback, as long as I stay outside of that range. That's the key. I want to avoid the range, I want to sell high, and I want to buy low. So I try to go up. Again, I don't want to sell into the range. I want to wait for the price to get up inside my levels of resistance. Look for those buyer failure patterns, right? Buyers will come in. What happens is the market will make a run higher. Buyers will think this thing has now reversed. They'll try to buy the pullback. Again, I don't like to pick a top on this. I wait for those buyers to buy that pullback. I know now where their stops are, and I can now sell into those stop losses. But let's just say, for example, though, we get a bigger pullback. Let's say we really jump up here. If we really jump, well, now I'm in the secondary zone now. I'm not a breakout yet. We'll talk about what a breakout looks like here in a moment. Once I get that real strong move up now we have to use, remember that when we talked about on the S&P, a nested now. Now it's a 1, it's a 2. And again, why do we look for a different pattern now? We look for a different pattern because momentum is different. We have different information, different inputs mean different outputs, right? Different information, different momentum. Momentum's a lot stronger now. So now at this point now we want to let the buyers try twice here on the pullback. Then we know where stops are and we can sell into stops. Now, be aware, a lot of times these deep pullbacks, they fool so many buyers. The market loves to just shoot back into that range. Don't chase after it. And as you already know, my favorite setup to avoid selling low, or in this case, selling into that level of that range, would be a trap on this one. Right? So now we've got two patterns here. One is a nested failure. The other is a two-try trap pattern. These are a bit more advanced, as you can see. But this is the way that, if you're serious about your trading, these types of patterns, because you want to get that deep pullback, right? I want that deep pullback, but I just don't want to just blindly sell into it. I've got to let those buyers kind of, as I always say, let them dig their own grave. Let them try to hold that pullback twice. Once they do, they're all committed. We can short right into those stop losses, and then don't chase after it, obviously. Wait for it to pull back and go back in again before we get back into that trading range. Now, I know you're wondering, okay, so at what point does this thing turn bullish, right? If we're so convinced we go up and come back down, okay, what does reversal look like? Reversals look like we saw on the S&P, or we were talking about on the S&P, right? First one is a strong move up. We always have to set the table with momentum. Momentum is the most important thing. So if we get a strong move up, now we see a pullback. Right? Moving average, now we see that strong push through. If I can get that strong push off the moving average, that's the giveaway. That now tells me the sellers have walked away, the buyers have it. I'm going to mark up that high. I'm going to mark up that low. You'll notice I like to use these hidden channels, right? Not off the medium term low, off the big low. And then what I'll do is I'll look to buy that first pullback. This is one of those patterns where it's all about hurry up and wait. You have to wait for the move, wait for the reversal, and then once you get that pullback, you've got to go hard. You have to get aggressive on that trade. If you don't, you might not get it again. Because what happens now is now everybody knows where we're going now, and the FOMO kicks in, right? Once that thing takes off the low of that channel, you know where they're trying to go. They're trying to go back up and retest that big top up there at 1743, give or take. Right? Now, sometimes that FOMO kicks in right away, right? Sometimes we see some big, think about it. We've got this virus stuff, we got OPEC, we got ECB, we got the Fed. We've got so many variables tomorrow. The Fed could sniffle the wrong way, right? I mean, Jerome Powell tomorrow, the ECB tomorrow, Lagarde, she could get to the podium and sneeze on the podium, and everyone's going, oh, shoot, this is not good, right? I mean, you think about it, right? The smallest of things tomorrow could light this fuse on gold being a fear market. That would be kind of funny if she got to the podium tomorrow and sneezed on the microphone. Oh my God. I shouldn't be joking around about this. The problem is we're going crazy here, right? Being locked down in Los Angeles for so long. Well, I'm sure you're locked down as well. Anyways, sometimes I could have some fun with you guys here, right? Trading be a boring game sometimes. It's some fun. So if we do get this thing, if it really rips, right? If it really rips as we go higher here now I look for that shallow pullback, and it's sometimes it will pull back, but usually it's just a little, if it does, it'll just barely kiss that moving average. It's like it's so aggressive, you can just tell, right? It's not pulling back below the moving average. That's what a weak trend does. If it pulls back and barely kisses that moving average, you know what's up now. Higher high on the price, right? Trap low. This will be another one of those FOMO type of trades. Target is back up to retest the high. Now remember, don't sit, right? Don't trade the middle. If we sit sideways here in the middle, I'm still going up. I'm waiting for failures. I'm going up. I'm waiting for nesteds, right? Same patterns there. Not much changes. Now, as we go lower, what if you want to buy this baby? What if you want to buy this market right now? Again, you can buy it off a reversal, like we mentioned. I've got two things I'm watching for to be a buyer. You ready? So first one is a crown reversal. We're so bearish here. If I want to be a buyer down here, I've got to be, first of all, you've got to be underneath that low. You've got to be deep down inside the zone here. I'm not looking for reversals near the range. We got to get down to that low. At this point, what will happen is the bears will come in. They'll try once. They'll try twice. And we look for that trap. At the very least, it's a double bottom. At the very least, these two are double bottoms. Ideally, it is a trap. You want a trap because you got to remember sellers will be coming in trying to sell high. The bears will try to sell high. You don't want to buy into those highs. You've got to wait for it to come back. And then as it goes lower and you start seeing that nice juicy signal candle, bingo. If you're looking to buy it, that's your signal. Hit it, right? And if you're going to do it, small position, bigger stop. Again, cut down those position sizes because you're going against the trend. Now, what is probably going to be a little bit easier on the mind, on the motion muscles, is if we get a strong push down. If we can see a strong push down, I would love to get something right where we get, because remember, this magnet, what we might see is we might see a big V bottom off that low. We might have everybody waiting for that magnet for a short covering rally back up to those highs we talked about earlier. So if this thing really runs lower, I wouldn't be surprised whatsoever if we get something like this where it goes 1, 2, 3. I can grab that high, grab that low, and grab that pullback right there. What this will be is it'll be a lot like a nested failure. But the key is going to be, okay, pay attention here. The key is going to be that second leg, right? That leg as we go, all right? That's going to be the key here. I'm not talking about this, right? 1, 2, no. That's not what I'm talking about, right? I'm talking about this thing literally kisses the magnet right there. And we get this, right? We get this 1, 2, bam, right? That big move up. That's going to give momentum back to the bulls again. We know the range is the magnet. And now we look for, right, that buy off the low. We may also see just V bottom, right? Literally V bottom. 1, 2, trap, and go from there. Those are all possibilities here. That's that same pattern we talked about, right? It goes up, barely pulls back, trap low. But again, don't mess with this direction if you don't get that real strong bounce. You'll see it. You'll feel it. And again, every morning we'll do it together. I'll put all the membership information. I'll put a link in the description of this YouTube video. And grab that free course. Okay, you'll learn more with that free course than you will anywhere else on the interwebs. I can almost guarantee you that. Everyone loves that free course. Okay, so gold's looking pretty good, but how do we sell it as it goes lower? The only way I can sell it as it goes lower is if I can get this strong move down, almost like, and I use the analogy of kind of like the offensive line in American football, where those big 300-pounders, right? Those insanely strong, athletic guys. It really is incredible how those guys move, those huge bodies they've got. But you want to see this big push, and then once you get that big push, I want to see us start to hold down here. If we can start to hold down here and start to show us that we're getting comfortable in this area, now bottom pickers are going to be our lunch. Well, might be lunch actually. It may be later in the session tomorrow. If we can get down there and hold, almost like that offensive line holding the defense away, giving the quarterback some time. I would say Tom Brady, but he left us for more sunny weather down south here. Anyways, I want to go up, right? I would look for those buyers to fail and back down again, right? That would be the idea behind that. Again, though, if we go down and bounce, this is very different. We go down, we sit around the magnet, right? We sit. Once we know the range, right, what do? We know failures. We mark up the levels of resistance above, just like these levels, right? Just like those levels, we'll make some down here too. We got to get up off that low, get the buyers to try and fail, and we're selling into stops. Now, keep in mind, too, those buyers could hold, couldn't they? They could hold that and run. 1, 2, 3 reversal. Mark up the high, mark up the low. We're buying off that low. When I say range, you think breakout, you think failures. Okay, 1, 2, 3 breakout into that hidden channel pullback. All right, guys? So keep that in mind here on the gold. We are looking good here now going into the oil. Boy, and I really appreciate you all sticking around with me here tonight. We're 45 minutes now into this lesson here. Are you still here with me right now? Let me know you're still here. How about hashtag still here right now? Hit that thumbs up button for me. If you're watching this video 45 minutes into it, right, you are the people, you are the person I want to work hard with every day in my trade room. Hit that comment section, hashtag still here, hashtag 1%, right? Hashtag I'm still quarantined and I'll do anything to be distracted right now. Anyways, over on the gold right now. Over on the gold here. On the crude oil. What about oil here? Wrapping things up. Well, first of all, we know this big spike higher just totally messed this whole chart up. Let's go back in time though. Let's make sure we think about where we are, because we talked about this last night on the newsletter. And I want to kind of bring you up to speed here, because we knew from last night, if you recall, we had this spike in channel. Remember this from last night, right? Spike in channel. And we knew this area had potential to be a buy area. We were also bearish, so we weren't going to be getting aggressive to buy down there, but we're now looking like we finally got that, kind of that momentum shift that we've been looking for. Now, with that said, just like the S&P, we've got some ranges here that are going to act like magnets, mainly that 27 even. Okay, this looks like kind of the meat and potatoes of this whole entire move right there, right around 27. If they can get through 27, then we start looking good up to that gap. Remember, that's the gap from last Friday. Remember last Friday? Right? Last Friday, everything was looking really good, and then all hell broke loose. We had that big gap down, that messy day, right? That big collapse, and now we may get back up to refill that gap. Don't hold your breath for that gap getting filled tomorrow, but that will be where these buyers are trying to go. Now, if these buyers can't hold this, they're going to want to go back into the range, and possibly, we keep talking about this. This is something I'm actually surprised. I've been talking crap to this OPEC deal all week, right? Like I said on Monday, I would be surprised if the deal hadn't fallen apart by Thursday. And supposedly it's looking likely at this point. It's really tough to tell whether or not everyone will get on the same page tomorrow between these three big oil producing nations, the U.S., Russia, and Saudi Arabia. If for some reason overnight we hear about anything falling apart here, so and so says this, right? Who won't do that? That type of gossip. The market will likely seek to get back to that $20 a barrel. Right now, it feels like we are kind of propped up on the hope of this production cut, this 10 million barrel per day production cut that they're flirting with right now. So we got 20. That's what the bears, well, first of all, the bears want to get back into that range, right? Then they want to hit 20. The bulls want to get 27, and then from there to 29. There's not a lot of space in between these, so it shouldn't be that difficult to get there. So now we know what the kind of the lay of the land is here on this oil. Now let's put this thing together. Okay, so what do we know right now? We know that the day was pretty much range bound all morning. When I say range, what do you think? Failures and breakouts. You'll notice the market was real calm pretty much all morning. And we really never got into our buy zones. We really never got into our sell zones until just about 2 o'clock this afternoon when the U.S. President Trump took to Twitter like he likes to do. And I believe it was something to do with the royalties to oil firms. I have to look more into detail on what exactly that means for us. But the reality is, this move higher was the result of it, and that really mucked this whole thing up. Because if all we had was this range, then we could easily look for buyer failures to sell above the high. We could look for nested failures to buy below the low. Why nesteds? Because we're so bearish, right? Momentum is so bearish. So it'd be nested failures to buy below the low. It would have been pretty easy to get, right? Buyer failures to sell above the high. Well, unfortunately, then this thing comes out. And this is really going to be very difficult, because if you want to call this a breakout, then where exactly do I start buying right now? Do I buy above this high? No, because that's the 27 magnet. Can I sell this thing right now? Not easily, because of all that momentum. What do we know about the markets? We know that momentum might be the most important thing for day traders. It's the most important thing probably for any type of trader, but we have a lot of momentum with that spike higher. Anytime we see a spike in one direction, we know we're probably going to see a very concise attempt to get that next leg. And they're going to want to get that second measured move, as we call them, right? So we know the buyers want to get back 27 already. They've got this big push up. I want to sell back into that range right now. But how can I sell with all that momentum now? And how can I buy? I mean, literally, you can't buy this. If you want to buy this, you could be back here. You're too late now. You can't buy this now, right? Where can I safely buy low before I get to the magnet? Gold was the opposite. Gold was too close to the magnet below. Same problem here right now on the oil, right? So you've really got to be careful here on this oil. This is going to be. I saved this for last because I know only the serious people are going to be able to really kind of get through all of this, because it's going to be a battle. It's really going to be a battle. For example, on the crude oil, right? Obviously, everyone's waiting for the production cut. Everyone's waiting for more information. That could have the market spike, right, all the way up to that high. It could have the market collapse back to that $20 a barrel. Okay, the strong move higher gives those buyers control. The bulls want to get to 27, maybe 29. Sellers, how do they fight? How do they fight against this momentum? How do they sell back into that range? If I'm worried about momentum, what do you think is the best way for me to sell short? Nested. Now, if I look for a nested though, this is where you've got to anticipate. Buyers are probably going to be coming in trying to buy off that hidden channel. Or they may be trying to use even something tighter, right? Like that little hidden channel. Now, what's the best way to sell if I'm worried about selling into a level of support? A trap. So let's put them together. I'm going against momentum. I need a nested failure. We have most likely going to be some rising support here, even though it's not confirmed yet. I would imagine folks will be there. We want to avoid that. We look for a trap. So my best thing to do right now is 1, is 2, and trap high. Now, we saw an example of this. I want to say it was last week. I wish I had the exact one on top of my lip here right now, my tongue right now, but I don't recall the exact day for this. But this is a classic setup. This is a classic setup where we know we have a support level here. We know we have a magnet below us dragging the price back down. But again, like I said, this move up just messed this whole thing up. When I saw it this afternoon back from lunch, I'm like, you got to be kidding me. This really made our job a lot more difficult. So if I want to be a buyer, if I want to be a seller right now, I've got to embrace the momentum, 1, 2, and ideally I've got to get that trap to short back down into that range. Now, we may get lucky and the market may 1, 2, 3 back down into that range. If that happens now I'm going to start looking to pick some tops. Now I'm going to start looking for some of these hidden channels, and I'll look for buyer failures off the high. See what I'm doing here, right? I'll use that new lower low. We'll use that to find resistance. Remember, we don't want to trade inside the range, right? So if we can get this momentum, if it really, if it collapses back down in, now I just got to make sure I'm selling high. I can use now those hidden channels. I can get up, buyer failure, and I can sell back down from there. Same idea we've talked about on all the other failure patterns. Get above the top of the range, wait for buyers to try, and sell into their stops. So those are 2 setups I'm watching for here as we go. Now, what if we keep going higher here? Right? What's the plan if this thing goes higher here? How do I buy this thing, first of all? Right? So now I know how I want to sell it. How do I buy it? Well, first of all, if we go higher, up into that range, this would be probably the easiest. So if we went up to 27, we start going sideways here, what do? Range bound market, focus on failures below the range. Get underneath the range, wait for that moving average coming over, seller failure. This will likely be the easiest one. Right? What I'll do is I'll line up these highs, look for that channel low. That will be a walk in the park. But again, remember, this is going to come a little bit later on in the process. You're going to have to see some ranges up here. You're going to have to get, right, this move up that low. You're going to have to get this to set up a little bit later on in the move. What if we pulled back? Could I buy it still? Is there any way I could buy it still? It's not a two-try trap because you don't have a higher high yet. And that would be I don't know about that one. That would be a pretty aggressive two-try trap. Two-try traps are usually very small. They go up, shallow pullback, higher high, trap. They're small, they're fast, they're aggressive. This is just not that. It's just not that environment. Now, they may go up, right, and run, and we might look for that later on in the process, but I don't think we're there right now. If we can pull back on this now, what I would anticipate is, and again, like I said, we're going to have to fight for this tomorrow. This is going to be a fight. It's going to be, it could get really nasty tomorrow. What's going to happen is if it pulls back here, what's going to happen? Bears, they're going to come in and try to sell this. They're going to want to sell it back down into that range because that's what bears do when they're above a trading range. The problem though is that I don't want to be a seller on this until we get, right, basically, and I can be a seller as long as I can get these buyers to commit and fail. But if we pull back on this, I'm going to look for the same basic thing again, but flip it against those bears now. One try, two try, nested with a trap, right? Call it a crown reversal, call it a two-try trap, whatever you call it. As you can see, the way this thing is setting up right now, it's going to be filled with traps. It'll be filled with grindy, again, that's why I said this is going to be some heavy stuff, right? This is going to be some heavy lifting here right now. So again, we pull back. We get above the moving average. The bears now come in. They try once. They try twice. Trap and go. Now, you might be wondering, what's the difference on these? The difference is we pull back. Buyers try once. We go lower. Buyers try twice. Trap high for the sell. Okay, watch how I do the second one. The second one is a push lower. Bears try once, bears try twice. It's a different direction pattern. It's the same basic principle. You're basically letting the opposite side of the market dig their own graves, so to speak, right? You're letting them try once, try twice, and because there's so many conflicting signals here, you've got momentum going higher, you get a range below you. The only way to really time this thing is with traps. And guys, I realize this is very, very heavy stuff. I realize this stuff is pretty complicated right here. That's why I want to make sure I save the best here for you for last. Now again, hopefully they'll go up higher here and we'll get stuck inside that range. Another option would be if they really run, right? If they really run and make this run higher, don't be afraid to pull out the two-try trap as we go. So if we see in the short term here, after they open up here, if we see them really push, right? If they really get strong, they don't pull back to the moving average. That two-try trap should be pretty reliable as long as we can do it underneath that low. And who knows? Maybe we get a little bounce off that prior support there as well. All right, guys. So remember, if we go back into the range, if it sinks back into the range, just focus on selling above the high. Right? Buyer failures above the high. If we really sink down. Okay, if we really sink down, please don't be foolish and try to buy that low. If it really sinks, all of that momentum now means if I'm going to be a buyer here, I'm going against momentum. What's the best way to buy below a range when you're worried about momentum? A nested failure, 1 and 2, and then back up, where again, you're buying into those stops from there. All right, guys? So now we get a pretty good plan. If they hold it, 1, 2, 3, and make a run, mark that low, mark that high. We're selling off those highs. And again, the next stop here is down around that $20 a barrel. All right, guys, looking great here. Well, great would be a relative term at this point on the oil. Tomorrow, we're going to come back and do it again together as we do every morning. Make sure you get registered as a brand new member. I don't want you to miss tomorrow morning's opening bell. Every morning, 8 o'clock Eastern time. I'll put all the information for you in the description of this YouTube video. Don't be afraid to call me in the office if you have any questions along the way. Use that live support tool if the telephone isn't a good fit. And by all means, if membership isn't quite right for you right now, right, it's okay. Grab the free trial though. At the very least, get the most out of our time together by grabbing the free trial. That includes your free trading course, all the examples, right? Hundreds of examples of how we use our favorite strategy on our favorite futures markets. Guys and gals, thank you so much for being here. Have a wonderful, wonderful holiday weekend. If you have any questions, drop those questions in the comment section below. There'll be no newsletter tomorrow night because the markets are closed on Friday. So we'll see you guys next Monday after the Easter and Passover break. Be well out there. Be nice to each other. Take care of your neighbors, please. Be nice to everyone. And we'll see you guys next time. Adios, amigos. Bye-bye for now.